All right, welcome everyone. Welcome to the Hurley Investments Market View commentary for Monday, March 6th. We have a new gentleman, James, here. It looks like Jim said hi, William said hi. James, nice to have you with us, which is funny because we have a couple Jim/James. Apparently, I just need about 10 Jim and James in my my group. James, if you wouldn't mind saying your last name. I've got Bosserman, and I've got Kohler, and I've got, who else do I have? Let me pull up my other James. James Radford. Got Rad here for. So James, give me your last name and we'll go from there. James Dennis. All right. Yeah, so if I call you Dennis, we might have some Dennises in here too. All right, guys, here we go. I'm going to ask you, what is up for this week? Because we have a couple things on the docket that are really important. I've always thought of doing these webinars because in 2008, I was managing money, but I went through the 2000 crash and the 96 crash and the 90 crash and the 93 crash. I've been through these crashes and I just absolutely hated the lack of communication I had with my advisor. Not to mention, I hated the lack of results. It was always something else's fault. It was always the mutual fund's fault or the market's fault. And I'm like, well, what am I paying you for? What am I paying you for if you're just going to say it's someone else's problem or someone else's fault? I know some of you are going to say, well, Kevin, I heard you're not a good friend of Schwab. No, I'm not. We're moving the heck away from them. Fidelity is where some of the big money resides. I will not be going to Schwab, period. That's just the way it's going to be. But what's up for this week? Because there are a couple things that are important. There we go. Powell speaks to Congress Tuesday, Wednesday. Love it. So what's the risk in this? What does Powell have to do? Which, let's face it, he has not done a great job in the past. It's kind of like putting Powell in charge of the microphone. You're just like, oh no, what is he going to say, right? What does Powell have to do? I'm going to change one word in there, Maud. He can, not will. He can, Maud put in there will, be hawkish and crash the market, which I 100% believe. Although I was a little bit dovish last time, right? Key word, boy, Maud, you're nailing it. I'm just going to copy it. Interest rates will keep going higher. Sorry, keep going up and stay higher longer. Perfect. I agree with it 100%. Jim Kohler says, favorite performance, not raise interest rates too high. So kind of scary because there's been talk on CNBC this morning and on Fox News this morning that what if this is the 50 basis rate hike that we were expecting? Remember, it came down to jobs, right? What killed our upward market? The job market. 515 new jobs and they expected 190. 515,000 non-farm payroll jobs when they expected 190. 480 on private payroll jobs and expected 180. $300,000 more jobs than expected. So let me ask you this question. Is inflation retreating? If I was going to ask you guys, is inflation retreating? What do you think? What would you do? So, Maud, expound on that. I'm going to hold off before I say what that is. Is inflation retreating? What do you guys think? Is inflation retreating? So I'm going to start with James. So I think that's a good answer. Maud, I'm going to get to yours here in a second. William, I'm also going to talk about yours, but William, I think yours is a little different out in Europe than in the US. Is inflation retreating? And the comment was, of course not, when you are still paying and I don't know where you live, $4.99 for a dozen eggs. For us, we're a little bit, well, yeah, because we do 5 dozen eggs and we're about $22 to $24. So I guess we're right in there, right? Maud said in some things, and I love that one, Maud. I mean, that is true, but I asked you to do a little more. In some things, but not others. And when I was thinking about that one, I'm like, well, gas came down in, December, January. But gas is like back up again. In fact, I was on some travels in February and I paid some outrageous prices for gas in Phoenix and San Diego and Las Vegas and Huntington Beach, California. And I was up there with Lee Maxwell. Where was I at? I was in Nevada City and Reno. I mean, gas prices kind of sucks. Maud also, excuse me, Maud also said some commodities have come down, some real estate in certain areas is coming down. So I knew you were going to say that. I'm going to talk about real estate here in a second. Jim's comment, inflation not coming down. Got to type that in. Inflation not coming down. And items that really matter. And hit, he calls them the normal. I'm going to use it. I was going to say mid-America, but normal folks. And I agree. I mean, energy prices seem to be spiking. Eggs seem to be spiking. Milk still is a little bit high. Meats are extremely high. My dividend payment for cows was amazing this year. But meat, extremely high. So I kind of say, the energies are high, but boy, their earnings didn't show it. I don't do a lot of clothes shopping, so I couldn't tell you if that's there. But let's talk about real estate. And I'm going to divide up into two, right? Residential, real estate, my goodness, Hurley, Apparently, I'm not a college graduate anymore. Residential real estate is definitely coming down, but not the boy, I'm trying to remember. It's not the property taxes. And just to let you know, in the last 2 years, my property taxes have more than doubled in Alpine, Utah. It is ridiculous. Again, I used to see it was about $470 on my little item bill, and this year it's like $1,040. So property taxes have skyrocketed in my area, right? It's really ridiculous. How about commercial real estate? What's happened to commercial real estate? And again, doesn't have to be right because I don't know exactly either. So kind of wish Dee Dee was here. If Dee Dee was here, I think Dee Dee knows as a real estate agent. Dee Dee, are you here today? She is not. So commercial real estate. Ooh, Maud says commercial has been coming down with all remote workers still not coming back or working half time in the office. There's a glut in some major cities. There's a huge glut of unused real estate. And I've got an article about that. Don't look, it'll make you sick if you follow it. How's the return to office going? Just look at one of the largest REITs, right? If anyone has tried to sell you a REIT in the last 5 years, 6 years, 7 years, they weren't doing their homework. In fact, 2.5, 3 years before COVID, and we're in 2023. So a REIT before 2015, if you had done your homework, you would have seen not a good investment. Same thing with bonds, right? If you looked at your bonds a year and a half ago, as soon as we had our first rate hike, some bonds were in big trouble. How's the return to office going? Let me find out what I want to do. Shares in real estate investment trust headed by CEO Stephen Roth has fallen 59.5% from their 52-week high a year ago, and almost 80% from their all-time high reached in early 2015. So see how that coincides with what I just said there? They've got all of this space that is unoccupied. And it's unoccupied because of higher interest rates and the fact that people are not just coming back to work, which is sad because if you were to ask me, some people do need to be at work. I mean, and Maud, don't hate me for saying this, right? I'm not a fan of doctors working via GoToWebinar. Let's do a Zoom call. I think doctors know a lot more by looking at and touching and feeling the temperature that they have, at a rash that they have, at the sunken eyes, there's just something that a doctor, when they can look at you, hear your chest, those type of things that I just think will make a better diagnosis than somewhat guesstimating over a Zoom call. And telemedicine right now just makes me scratch my head how many missed symptoms are going to be seen and how many lawsuits will come out. In fact, Ma just typed in, I actually agree with you, Kevin. All capital letters, explanation, 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 explanation. I hate Zoom calls. I don't do them. I've got Dr. Gupta with us. GV is a doctor that I work with. I wish I had Phil Sorensen on. Can you tell I got a lot of doctors that are my clientele, right? I'm sure they'd probably all agree that, hey, it's tough. You can't have the same level of, I don't want to call it service. You can't have the same level of expertise when you don't have the actual patient there in front of you. And I know it sounds a little bad, but to touch and to feel, to see the symptoms, to feel the symptoms, to see the rash, to listen to your lungs, you just can't expect that same level of service with them not being right there. We all hate the waiting rooms of the doctor's offices, right? Well, we're just going to get the sickness from everybody else. But there's something to be said with being on a Zoom call and thinking that they're going to have enough to diagnose that's going to get it. I think in some sales positions, those people that are in sales, you've got the go-getters that are the top 20%. The other 80% need the direction, needs the training, needs the overlook, needs the hands-on to push them to make their sales. There's very few that if left alone have the drive to do what they need to get done. And I think as the generations are going on, it's getting even worse. It's the entitlement and, well, I should just get paid a minimum wage of $15 for flipping a burger with no skills. Man, I just don't see how it works. With that said, you can now get rich with having a YouTube video and an Instagram and a Facebook and a TikTok. Some of the people in my neighborhood, amazing. Emily Taylor lives in my neighborhood. Great looking gal, talks about exercise and exercise gear. She's killing it. The Binghams, if anyone follows the Bingham family, this is how we Bingham. If you ask me, how boring is it to look at what a family does every day? Well, these guys have got it down. It's interesting. It's fun. 1 million views an episode of watching them wake up and have the same snow I have in my backyard. There are a couple others out here that it's just like, they're getting paid millions of dollars to blog. It's shocking. The commercial real estate not doing good. It really, you guys hit it on the head. What we're really trying to figure out comes down to this, and I think I've got it. Let me get the chart in here. There we go. That was last year's federal fund rate, right? 0.25% up to 4.5. 18 times the beginning of the year's rates. This is why bond funds should have been getting shelled out, and you should have been moving out of your bond funds in 2021. If you can get for the same treasury 8 times the interest on December 15th, you could have gotten on January 26th. That's 18 years. That par value of $1,000 is worth 120. There's another quarter point interest rate in January of 2023, right? We're probably going to have a quarter point in March. We'll probably have a quarter point in May. We'll probably have a quarter point in June. Then we're over, right? Then it's done. Then it will hopefully be over for a 6-month to a year period of time. That means we'll have a 5.5 to 5 3/4% rate hike. A year ago, I said, don't be surprised if the rates go up to 6%. I hope I miss it. I might miss it. It might only be 5 3/4. But man, was I close. So what are we doing? We're protecting. I put a little interesting article in here about what's going to happen. It's going to be interesting. He has to walk a tight line behind, hey, my job is to tame inflation, and at the same time, it's not my fault, but I can't kill the economy either. Really tough to raise rates into a recessionary time period, but we did that the first 2 quarters of last year. So don't hesitate to think we won't do it for the first half of this year. The other thing I don't understand, 17,000 jobs were started in January. I've got to assume there's a big revision. I got to assume this Friday we'll have a big revision. With all those companies that are laying people off, it doesn't add up. There's a disconnect between the market and fundamentals right now. We get an interest rate hike in March that's 50 basis points. We're going to go back and test those lows at what, 3,600 that we had back in October of last year. And that makes sense. Markets tend to have a double bottom. They retest the lows. And then you'll see things move up from there. First half looks dangerous. We'll probably be adding. I know we took some protection off on Friday that was expiring. We're going to be adding and pushing protection out in time to make sure we're covered for our March 22nd rate hike meeting, which is roughly about 2 weeks from this Wednesday. All right. Big picture we went over last week. Actually, I need to go back up. Let me go back up. I'm going to put it in right here. Okay, I'm going to ask this group one more question so that you have the understanding that we have. Where is the risk? Is it to the upside or to the downside? Is the risk missing a run up, or is the risk missing a huge drop in our market? Where is the risk in our market? So I've got 3 drops coming in. Ooh, someone thinks the risk is on the run up. Risk in the job part. Think the risk is upside. So let me make sure I'm getting this. Do you think there's a greater risk of missing a run up? Or do you think there's a greater risk of having a run down? So just type in run up or run down. Do you think there's a greater risk of a run to the upside, of missing that? Or do you think there's a greater risk that our stock markets go down. Wow. So there's an interesting article about an 8-week run up in our markets. But I'm sorry, I'm kind of a believer right now that the risk is to the downside, that we have more risk of our market losing 400 points than we have for seeing our market go up 400 points. Now, the reason why, and I should just say for me, the risk is to the downside, which is a negative 400 points. And actually, I think where we finished today, it's 448. I'm just going to use a round number, right? 448 to 3,600. So I am protecting portfolios accordingly, protecting them this week for what we're going to expect to hear from Powell. I'm protecting it for the 22nd rate hike. There's just not a catalyst right now that's going to move our markets to the upside. And because of that, I feel the risk is to the downside. I don't feel at risk that I'm going to miss a run up. I feel that we're going to have a run down. I don't know how anyone can think that there's a risk to the upside. Well, we've already fallen X amount. You know, I hear that. I just don't see it. I don't see the risk being to the upside that I'm going to miss a big upside run. I see the risk to the downside that we're going to drop and retest the October lows. Okay, for this week, pretty quiet week. Actually, I should be going through here. Still technically bearish on the Dow, but it's almost crossed over. Couldn't get over the 50-day today. Key point to remember. Couldn't hold the gains at all. It was kind of pathetic. S&P still bearish. We did bounce above the 50-day. I bet we're going to come down and test it. We'll see at 39.92. And the NASDAQ is still technically bearish but turning. And again, I do think we'll go down and at least test the 11,402 mark. This week for our earnings, relatively quiet. Oh, where do we think we're going to end March? I'm still going with the negative 2.0%. Thought I'd tab that on out. So looking at 2% losses here. Earnings, we have Dick's, Crowdsource, Purple, Campbell Soup. Thursday's the bigger day. BJ Clothing, Genesco, JD.com, DocuSign, El Polo Loco, Gap, Oracle, Smith & Wesson, Ulta, and Mountain is Vail. Buckle on Friday, last week of what you would deem the retail sales. Economic reports, really it's nothing until Friday. Even ADP employment won't matter. It'll be non-farm payroll, private payroll, and we have Powell speaking Tuesday and Wednesday. Interesting that the SEC Commissioner's portfolio has a bunch of ETFs in it, a bunch of mutual funds in it. Pretty interesting to see that their favorite are BlackRock, State Street, and Vanguard. When it's funny because you probably should see BlackRock, Goldman Sachs, JP Morgan for results. State Street and Vanguard are cheap, but their results are pretty pathetic. Yet the Admiral Fund, I know the Admiral Fund has 30 some odd $billion. I get it. Interesting article to read. Cash is paying more than traditional stock bond portfolio. Just something to keep in mind right now. People ask, well, hey, we've got a lot of cash. Cash we're getting a good interest rate on, not too bad. Do read through the article on the REITs, people going back to the offices, and over the weekend, China set their GDP for 5%. Everyone was expecting 6% or higher. For a reopening and the pent up money that they have available, kind of shocking, pretty shocking to see that they're being conservative. Not what we would expect, especially since she is replacing everyone with his little puppets. This was a bit of a shocker on Sunday to see that how low they set their target GDP, especially since, let's face it, they somewhat manipulate the way they want to. So with that said, what questions do you guys have for me today? What questions can I answer for you in regards to your portfolio, in regards to what we're doing or how we are doing it? What questions do you guys have for me? I'm going to give you a second to type something in. William, I'm sorry. So William just said, what about my inflation? So William, I think the European inflation is war-based and it's fear-based over in Europe. I don't think it's the same inflation that we're getting elsewhere. I don't live over there, so you can be telling me, hey, Kevin, a liter of petrol is, $9 now. It just seems what we're seeing over there is fear-based by way of energy from Russia getting shut down and capping the dollar that they're willing to trade that Russian oil on. But understand, Russia trades it to Africa that goes back to you guys. I know natural gas was expensive, but natural gas has gone down by half its value in the last, 5 or 6 months. So that should be cheaper. Again, I don't know what eggs or other things are over there, but if you were to ask me, what about your inflation? What about European inflation? War-based and fear-based right now. And I'm not saying that it's not warranted. I'm just saying, since I don't live there, I wouldn't have an accurate experience, nor have I studied it enough that I can make an honest answer. So that's why I didn't read your comment before that, that the European inflation is skyrocketing. That's something that I don't think the United States controls the same way. So hopefully that makes sense there. If it doesn't, go ahead and ask me again, and I will do a better job of commenting again on what you said. Jim, I hear you. What do you think of reserve cash and portfolio to be used in a short-term T-bills just to get some return? So Abraham, I was going to be doing that. The problem is those short-term T-bills, you've got to take your profits in between the interest rate hikes, or you're selling them off for a loss where you've got to stay in them for that 3 to 6 months. I really do think we're going to stick some cash in the short-term T-bills for some of people's accounts. And I think it's a great thing to do because it's tax-free. I'm just not sure when we're going to need that cash reserve, in which case it would not surprise me if June is not the last rate hike. So let me pull up the rate hike schedule. Let me pull up the rate hike schedule. For 2023. So yeah, I think the July 25th, 26th would be our last rate hike, which A 3-month T-bill I like. I would not be doing a 6-month because you'll go through 3 rate hikes, which will lower that value. And at lowering that value, you can't get out of if you want the money for a good deal before then. But a short-term 3-month tax-free return, you'll get 1.25%, 1 1/8%. Great opportunity. All right. Any other questions? If not, guys, thank you very much. I appreciate you being here tonight. I hope this answers questions on how I'm looking at the market and what my concern is. If you have any others, don't hesitate to email me. But I would definitely tell you right now, if you're looking at placing trades, bearish, if you want to protect your stock ownership, now is the time to readjust and to do so. Appreciate you guys being here. I will look forward to talking to you soon. Probably I'll end up talking to you again this Thursday. Have a good one. I'll talk to you then. Bye-bye.